And major indexes in Asia closed mixed on Thursday as investors digested a barrage of economic data releases out of China. The Nikkei 225 climbed 0.4% to close at 21,448.52. The benchmark index has closed higher for 13 consecutive sessions now. Across the Korean Strait, the Kospi declined 0.4% to close at 2,473.06. Down under, the S&P ASX 200 closed up 0.1% at 5,896.12, as losses in major miners were offset by gains in banks and information technology stocks. Greater China markets finished the session lower as investors digested the release of the economic data. The Hang Seng Index tumbled sharply, down 1.92%. On the mainland, the Shanghai Composite slid 0.35% to close at 3,370.09, and the Shenzhen fell 0.82%, ending at 1,983.71. Now let's see how the crude oil markets are performing. Oil prices are stable, supported by ongoing OPEC-led supply cuts, tensions in the Middle East, and lower U.S. production due to hurricane and forced closures. Well, Brent crude futures were seen at around $58.10 a barrel in early trade, slightly lower than their last close, but they're still around 30% above mid-year levels. The U.S. crude futures were at $51.97 per barrel, and that's also down from its last settlement, but almost a quarter higher than in June. Meanwhile, U.S. output slumped by 11% from the previous week to 8.4 million barrels per day, and that's its lowest since June 2014, as production had to be shut because of the tropical storm Nate, which hit the U.S. Gulf Coast earlier in October. A research analyst at the financial derivatives company, Adim Okwesa, joins us now to talk about the activities at the crude oil markets today. It's good to see you, Adim. So we see oil settling lower today after touching a 3-week high earlier. What's driving the market?
Yes, I think after several weeks of flat trading, we saw a risk premium from tensions in the Middle East return to the market. On Monday, Iraq forces moved into the oil-rich province of Kirkuk and shut off about 70% of that region's production. Now, this in combination with political tensions between the U.S. and Iran drove oil prices to close to $59 per barrel. However, yesterday, the Energy Information Administration reported yesterday that gasoline stockpiles and diesel stockpiles rose unexpectedly, signaling that demand was not as strong as anticipated. So that is why oil prices are a bit lower today relative to yesterday's close.
But what upside do you see in the oil market going forward?
Well, I think the real upside is not even tensions from the Middle East, but rather this rising demand component that we've been seeing I've been hearing about this last couple of weeks. I think tensions in the Middle East come and go, and I think the market has already priced that in. However, the global economy is forecast to expand at its fastest pace in almost 7 years. That alone should boost oil demand considerably. And also, as we move into the winter months, it gets colder in the northern hemisphere. The demand for heating fuels and diesel should also rise considerably. And also, let's not forget that this rising demand component should help offset the threat of rising production from the U.S. and rising production from the U.S. So I think the real upside is in this rising demand component. And in the next, I think it's even too early to say now, but in the next couple of weeks, we should see oil prices inch higher, maybe closer to that $60 per barrel mark.
Now, Adim, OPEC members are reportedly forming a consensus around extending the production cut deal. Given that the market is already tightening and expectations of robust oil demand in 2018, do you think that OPEC will take a wait-and-see approach or go ahead and extend the deal on November the 30th when they meet?
Well, I think there's a strong likelihood that the cartel would take a tentative position, particularly if demand for crude oil and petroleum products remain strong. I think OPEC, the cartel, rather monitor the dynamics of the oil market and, of course, monitor production levels in those countries that are initially exempt from the deal, such as Libya and Nigeria. I think the cartel But to answer the question if they would extend or not, I think it's a no-brainer. I think the fundamentals still indicate a supply glut, and a non-extension will send a negative signal to the market and undo all the progress that OPEC has been able to achieve so far. So I think there's a strong likelihood that OPEC would rather take a decision in the early parts of 2018 than this November 30th meeting.
Research analyst at the FDC, Ademokwesa, thanks for sharing your thoughts with us. Away from the markets now, the South African government has carried out a major board reshuffle for its troubled national carrier, South African Airways, replacing all 6 board members. Johannes Mugwaza has been named chairman, replacing Dudu Mnyeni, who was an ally of President Jacob Zuma. The Ministry of Finance, which made the announcement, gave no reasons for the shakeup, but says the new board brings an in-depth knowledge of business in both the private and public sectors. Mnyeni had been reappointed in September 2016 for a year alongside 11 other board members. The national carrier received state funds to repay loans in September and has been given until the end of October to settle $374 million of maturing debt to domestic lenders. Meanwhile, the United Kingdom has asked financial enforcement agencies to probe possible ties between HSBC Holdings and Standard Chartered to South Africa's Gupta family. The Financial Times reports that the Chancellor of the Exchequer, Philip Hammond, says he had passed on concerns from a former Labour Cabinet Minister, Peter Hain, that the London-based banks might have handled illicit funds linked to the family via Hong Kong and Dubai. The Guptas are at the heart of a political scandal in South Africa over allegations that they used friendship with President Jacob Zuma to influence state business, but both Zuma and the Guptas have denied any wrongdoing. According to the paper, Hain did not accuse the HSBC or Standard Chartered of any wrongdoing, but calls for a review of transactions due to evidence, including material from whistleblowers, that hundreds of millions of South African rand were laundered out of the country. Still to come on the program, a look at Africa's food security. Do stay with us.